Hello all of you, I hope you are doing good. Today we'll do the revision of accounting standard 26, that is intangible asset. AS 26 talks about the intangible asset, AS 10 talks about the tangible, and AS 2 talks about inventory. Now remember this, like AS accounting standard 10 talks about the intangible asset PP and their depreciation as well. Similarly, AS 26 talks about intangible asset and their amortization. We use the word amortization when we depreciate the intangible asset. So AS 26 will discuss about the intangible asset first, and then we'll talk about how to do the amortization of intangible asset. So what AS 26 says that here, introduction, they say AS 26 explain how to account for intangible asset which is not covered by any other accounting standard. So they talk about the intangible asset for only those which is not covered by the other accounting standard. For example, if I say you purchase a car. In a car, basically it's a PP which is going to cover by AS 10. But inside a car, there is software, suppose that here. Okay. For example, Tesla is very famous. They have a AI system and all that. So that is going to be account as per AS 10 only. Okay. So that you cannot say inside a car, there is operating system. Okay. So that is going to cover, the software is going to cover AS 26. No, that is a part of that PP only. Okay. That is going to cover under accounting standard 10 only. Okay. It tells when an intangible asset should be recognized and how it should be measured and what disclosure. So they talks about the intangible asset recognition, measurement and disclosure. Now first part is we are going to discuss the meaning of intangible asset. That what do you mean by intangible asset, which is important. So they say intangible asset is an identifiable. So now the question arises, what do you mean by identifiable? We'll discuss that. Then it's a non-monetary asset. Now the question arises that here, what do you mean by non-monetary asset? We will discuss about the asset that. Okay. Now we'll see the definition of what is identifiable. What do you mean by asset? Non-monetary means what do you mean by monetary? Something which is receivable and payable. Other than that, we call them non-monetary. But what do you mean by asset? We'll discuss without any physical substance. So they say an intangible asset is an identifiable non-monetary asset. They don't have any physical substance held for use in the production or supply of goods or services for rental to other or for administrative purpose, like the accounting standard 10 only, where we discuss about the PP, tangible item. Here we're discussing about the intangible asset. Now understand this. I will discuss in detail what do you mean by identifiable, what do you mean by asset. But they say that now it can be used for the purpose of production or for supply of services, or it might be we are giving on rental to others or for administrative purpose that here. But they say here, when we talk about that here, the intangible, I will come to the identifiable and all that, but this example, if I say computer software, patent, copyright, trademarks, goodwill, license, import quotas, and franchise, all these are what intangible assets. This, all those certain items may seem tangible. Their value is mainly in the intangible asset they hold, like the software stored on a disk. The real worth lies in the intangible assets such as intellectual property software rather than the physical object disk. Now listen very carefully, important part. What it says that suppose if I say that now you purchase a software by paying, let's say, the 10,000 rupees. But the software suppose comes in disk. You say no, so disk is a physical. So it is not a intangible. Let's listen that. What is the value of the empty disk? If there is a blank disk, what is the value of the blank disk? Nothing, 10 rupees, 20 rupees, that's it. But you are paying 10,000, the content which is inside the disk. So we would dominate that, whether disk or the content inside the disk, content inside the disk. We are going to call them intangible asset. Okay. Now we have to see what is the content, core thing which we are paying that here. Now you purchase the car. When you purchase the car, suppose you are going to become a chartered accountant. So when you become a chartered accountant, suppose you purchase a car, any car you purchase, that inside a car there is an operating system. Nowadays very advanced software come in advanced, I mean to say the features comes in car. So that is software that inside that runs, I mean to say, you can say some GPR, something like that. They mention the inside the car. That's a software. So that software I am not going to recognize as intangible because that is a part of the PP only that here. Okay, so we have to see the which is the main component that here. Accordingly, we will decide. So certain time you may feel that no, this is not intangible. For example, I give an example of software which come in this. So then the software is the main content that. So we are going to call it an intangible. Where the car is the main content, we are going to call them PP. You got the point? Okay. Now there are certain definition we'll discuss. What to mean by that here is the identifiable. Identifiable means to be considered identifiable. It means they have their own identity. It must be clearly distinct from the goodwill. It means they are not talking about the goodwill. They are other than the goodwill. That item should have their own identity that is separable from the goodwill. Goodwill is a different thing. Their reputation and all that. We'll discuss that. But they are talking their separate identity other than the goodwill. With separable means, enterprise could sell them, rent them, or exchange them, and the future economic benefit associated with the asset. I mean, they have their own identity that here. We can sell them, we can rent them, okay, or we can exchange with them someone that here. They have own identity, like the software, okay, and we are expecting certain future economic benefit from that asset. They say a license to operate a bus on a route is identifiable. Suppose someone took a license to operate a bus, okay, from one city to another city. They have to take a license that to operate in that particular route. So there is a legal right that they have. So that is identifiable. Okay, they have the right. They have purchased those rights. The mining rights granted by the government to a mining company are identifiable as they have arise from the legal right. So legally they have purchased those rights. Okay, someone, for example, the flight when they land on this was Chennai airport. So any flight cannot just come and land on the Chennai airport. They have to take a rights that here. Okay, those are the intangible assets. Now they say, what do you mean by asset? Because they say it is identifiable non-monetary asset. Asset means that asset is a resource which is controlled. You have a control on someone that here. As a result of the past, you are expecting some future economic benefit. Let me give an example right now. I purchase a software. Do I have a control on them? Yes, I have a control on them. Because I got a control. How? Because of some past event. What is past event? I purchased it. And from that software, I'm to expect certain future economic benefit. Okay, for example, that here, in my iPad, I use one app here. All these, whatever, right on my iPad here, that's reflected on screen that. I use some software here. So I have a control because I purchased it. Okay. Then what is the past event? I purchased that. Okay. And obviously I'm expecting certain future economic benefits. So that is what asset for me. Then it says that here. Now, one more thing is that here. Now you will tell me, sir, what do you mean by control here? The control is defined in the next that you can see. What do you mean by control? Control means I have the power to obtain the future economic benefit from the resource. I can restrict it also. Now understand this point. Control does not mean I am also going to. I'm the only one who is going to use it. No. It means I can also restrict to others. Something which belongs to me, I can tell some other, oh, don't use this my software. Why are you using this? It means I can restrict to others as well. Got the point? So they say Moon Limited providing training to its staff on a topic like GST, accounting standard, or Ind AS for legal compliance. Now they are giving the training to their staff. Can I call it that training is an intangible asset? Answer is no. You know why? We don't have a control on employee. They are working for us today. They may leave us tomorrow. We don't have a control on them. Now, can the training cost be recognized as an intangible asset? The answer is no, because we don't have a control on employee. So in these cases, while the company benefits from the improved staff efficiency, lacks the control. There is no control that here. As staff can resign anytime. Without control, it does not meet the criteria for an intangible asset. Therefore, training costs are not recognized as what intangible asset. Now people argue, no, sir, we have a bond with them. They have to, no, come on. Nowadays, when you become a CA, you can leave. I'm to say, it's up to you that nobody going to, I'm to say there is a bond, contract, whatever penalty they charge you. But if the day you decided you don't want to work for them, you're not going to work for them. Okay, those employers don't have a complete control on what employee. So we discuss about what do we mean by intangible asset. That is what a intangible asset is, an identifiable non-monetary asset without any physical substance, and we held for use that here. Okay, it might be used for production, supply of goods or service, rental to the or administrative purpose. Now, when should we recognize that in the books of account? We'll recognize that here now. When you're expecting certain future economic benefit to you and cost can be measured reliably. Obviously, we should know the cost, then only we can recognize in the books of account, and we are expecting some future economic benefit. So when I say we are expecting certain future economic benefit that here, so then only we can recognize. Not what, note that the initially measure cost initially we measure at cost that. Okay. But what is future economic benefit? Future economic benefit, two things is that here. Either the revenue will increase or the expenses will be reduced in future. So for example, using intellectual property can reduce the future future production cost. So two things. It might be a future economic benefit might be that help me to generate the revenue or that help me to reduce the cost. Both are the future economic benefit. But when we purchase the intangible asset, two things. The first, intangible asset might be a purchased intangible asset or intangible asset internally generated. We generate the intangible asset. So how to recognize the cost in that case? When we purchase the intangible asset, what is going to happen now? The purchase price will write it down. We'll add the import duties and other taxes. If any net of refundable, it means something which is refundable. We are going to claim the input GST. That is not a part of the cost of intangible asset. Okay, refundable taxes, they are not the part of intangible asset. Similarly, like the PP. Add directly attributable expenditure which makes the intangible ready for its intended use. For example, installation charges you pay for the software or any trade discount if any, that should be deducted. Whatever price comes, that is what are intangible, the cost of the intangible asset. But intangible asset might be purchased or it might be a internally generated intangible asset. So how to recognize the cost in case of internally generated? They say first, that internally generated intangible asset that here now, the expenses are divided into two categories: research and development. Research and what? The development. Research and this is what? The development. What it says that here, originally in plant investigation for gaining scientific or the technical. We are doing the research, something we want to develop. But before that, we have to do the research. So they say whatever expenses that we have incurred during the research stage, it should be charged to P&L account. The research expenses should be recognized in P&L account. It will be charged to P&L account that day. But why? Why it will be charged to P&L account? Because when we do the research, we don't know whether we will be able to develop the product because we are just doing the research. Someone doing the research to make a medicine that will help to cure the cancer patient and the lower amount of cost. So very less expense. So they are just doing the research. They have not yet developed. I'm to say they're just doing the research. That research might be successful, might not be. So we don't know that. So it's an uncertainty regarding the future economic benefit. That's why accounting standard 26 says that research expenses should be charged to the profit and the loss account. Then that's the reason that they have mentioned that in a research phase, an asset existence generating future economic can't be demonstrated. It is uncertain. We don't know that. Okay. Now, if research and development phase cannot be separated, they should be able to bifurcate the difference between the research and the development. Research will go to P&L account. Development during the period of development of the intangible asset, that will come to that will be capitalized. That will be part of the intangible asset. But if you cannot bifurcate the research expense and the development expense separately, all expenses will be treated research expense that will be charged to profit and loss account. And one more thing, past expenses cannot be treated asset later. Once you have charged to P&L account, suppose you're doing the research, you charge all the expense to P&L account. Now later on, after 2 years, you get the success. Now success, you started developing the product. Now you cannot argue that in the last 2 years we were doing the research, so all the expenses that we have incurred during the last 2 years related to research, now it can be capitalized. No, once P&L all done, that is always P&L. We cannot shift it from P&L to the asset side. This is what they are saying. Now when you come to the development stage, they say, after applying the research finding, whatever you find something that here, you found something in research, now the research gets success, now you're developing the product. So occur before starting the commercial production or what? Use. We are not actually doing the production from that particular intangible asset, or we are not using that intangible asset. We are developing that intangible asset. They say we call them that condition for recovery. Whatever expenses that we incurred during the development stage, we will recognize them if all these 6 conditions are satisfied. So remember these, you know that before CA foundation, you know nowadays first stage is CA foundation if you are coming from the graduation, you come to inter directly. But before the inter that the CA foundation, you know, before then 20, I think 16, 17, they don't call it CA foundation, they call it CPT. What they call it? CPT. Okay. And there was no AIR in CPT. Initially it was, but there was later on they cancelled the AIR and CPT. Remember this, CPT, AIR. Okay, all India right. Now, why I'm saying CPT, AIR. 6 conditions. C, they should be capability. When I talk about the CPT that here, for this the capability here, cost can be, the C is related to the cost, one by one that here. C is related to what? The cost that here. Okay. So cost can be measured reliably. So they are saying reliable that here, measurement of the development expenditure. This is related to the cost. Cost can be measured reliably. P is they say probable that future economic benefit, the capability, or you can say the probable future economic benefit. So from that asset, we can, these two is common. Nah? So better that first C is the C for the cost can be measured reliably and the probable future economic capability to generate a future economic benefit. Now T is for the technical feasibility. Is it technically possible or not to develop the product? If it is possible, then only. A is for what? Ability to sell or use that. I is for you should have intention to complete that. And R is for the risk. There should be resource also available. If these 6 conditions are satisfied, we call them that the expenditure that we incurred during the development stage, we can capitalize. What is C? Cost. What is P? Probable future economic. What is T? Technical feasibility. What is A? This ability to sell or use. What is I? Intention to complete. We should have intention to. What is R? Resources should be available. CPT, AIR. Okay. Now here, if these 6 conditions are satisfied, whatever cost that we incur, we can capitalize. But remember that they say when it's come to the internally generated intangible asset, that here research will go to P&L account, development cost will be capitalized. Research will go to profit and loss account, and development will be capitalized. But remember that here now. When I say this accounting section 26, the development phase expenditure or present value of the expected future economic benefit from such intangible asset, in that case, we are going to recognize that here is a lower of A or B. It means the expenditure at the development stage or the present value of the future economic benefit from that particular intangible asset, whichever is lower, we have to recognize at D, that price. Okay. Now here, before we discuss further that, okay, now come to here, super 100 question. Come to here, question number 83. What it says that now, they say a company acquired for its internal use, okay, a software on 1st of March 2020 from UK for £150,000. The exchange rate on the date was £1 is equal to 100 rupees. The seller allowed a trade discount of 2.5%. The other expenditure, one by how much you incurred cost, £150,000, 1,50,000. Okay, we'll convert into rupees. Don't worry. They say import duty 10%, but before that there is a trade discount of 2.5%. So 1,50,000 multiplied by 2.5%, that is coming 3,750. This is the value. Now what I will do that here, import duty is how much? 10%. So I will take the, okay. Now they convert into what here? The rupees that here. Okay. So they just multiply by these dollars, not dollars, pound into a rupees. Rupees, that is 100. Okay. That is coming in rupees. Now 10% is the import duty. So we add the 10%, this value come. Then they say that a 5% additional import duty on that. We are going to calculate 5% on these amount that is. Okay. Yes. Okay. The 5% on these amount. Then the value come. Then they say that they incur entry tax 2% recoverable. Recoverable is not a part of the cost of intangible. Installation expense, it is before they're ready to use, it is 1,50,000. We'll add 1,50,000 here. And professional fees for clearance from customer is directly attributable to that here. Okay. That will add to the cost of the intangible. That is total cost. How simple it is that. Okay. Then question number 83. Now 84. During 21-22, an enterprise incurred a cost to develop and produce a routine low risk computer software. They develop internally generated software. Okay, as follow. So they incurred that a completion of detailed program and design. Okay, it's a research phase. Coding and testing. They are doing testing. Okay, these are also research. Now other coding tests, other coding costs. It is a cost that is. So other coding costs that here, testing costs that here they are saying, and the product master for training materials that here now. Okay. Now what is going to happen? They say that here the expenses of the program and designing and this is coding and testing. That is only the research stage. This is what they say that by ICM. Now in these case 90,000 would be recorded as an expenses, rupees 50,000 for completion of detailed program design, 40,000 for coding and testing to be established, technical feasibility. Once it is feasible, any expenses which is incurred by them, that is a part of the cost of the intangible asset. Now cost incurred from the point of technologically, it is not feasible that here or asset recognition criteria until the time when products are incurred are capitalized software. So 63, 18 and 19,000, these will be capitalized. Then they incur the packing the product. So packing is a packing material that the product is ready to use that here, ready to sell that here. Okay. So then what is going to happen? That packing cost 16,500 should be recognized as an expense. It will go to profit and loss account. The expenses that they have incurred during the research stage, that will go to P&L account. During the development stage, that will be capitalized, and the packing cost that will go to profit and the loss account. Okay. Now understand this one. What it says that very important, that is question number 85. What it says that here now, they say here NDA corporation that is engaged in research is engaged in what? Research on a new the process design for its product. It has incurred an expenditure of this 530 lakhs on research. Where it will go research with a P&L account. So this 530 will go to profit and loss account. Then this is the development of the process begin on the 1st of April 2011 and development phase expenditure was 360 lakhs. How much they have incurred? They have incurred 360 lakh expenses. Basically, they have development expenses that they have incurred how much? 360 lakhs. Now, second point. Then they say here, now development expense 360, okay, which meets the asset recognition criteria. From 1st of April 2012, the company will implement the new process design which will result in after tax saving of rupees 80 lakhs per annum. So they have which will result in after tax saving of how much? 80 lakhs. So what they say that here now, the present will expected future economic benefit. There is future economic benefit 80 lakhs per annum for the next 5 years. But this is the present value. They have given the discounting factor for the 3.7908. So 360 the expenses that we've incurred. Now 80 lakhs is the per annum. Multiply by 3.790. This is the present value of the future economic benefit. So 360 or 303.26, whichever is lower, this is lower. So intangible asset will be recognized at these price. But we incur the expense of 360. So 360 we incurred. This is the present value of the future economic benefit, which is lower than the actual cost. So we have to record these difference will go to profit and loss account. So they ask you that here, accounting treatment for research expense, it will go to P&L account. The cost of internally generated intangible asset as per AS 26. The cost of internally generated asset that will be recognized 303.26 that here. Okay. The lower of the cost incurred and the present value future economic benefit. The cost, now this much amount will go to P&L account. Even they don't ask you, but it will go to P&L account. Now the amount of amortization of the asset. What is the price we recognize? 303.26. The life is 5 years divided by 5. This, it will go to P&L account. Okay, amortization. SLM method. Now, because I have not yet come to the amortization method, but generally, if we don't know the future pattern of the future economic benefit, we are going to that here. They say we are going to charge at what here is the SLM. Generally, it is recommended. In fact, the SLM method we can. So they say amortize the amount of amortization of the asset, and they have the pattern also is same 80 every year that here. So that's why they choose the SLM method. Okay. Now I will come to the amortization part. Don't worry that. Okay. Now here they say when it's come to the we have done with the question number 85. Okay, simple. Now 86. Okay, I will discuss it later on that here. Okay, now understand this here. What it says that here now, they say calculation. Okay, now the cost of internally generated intangible asset. The cost include the expenditure from the recognition condition onward and cannot be reversed. Obviously, once you recognize that your I would say research P&L development, it will be capital. Once you have taken to P&L, you cannot transfer it to the as an asset. So it covers expenditure on material, service, legal right, registration fees, salaries, wages, employment cost for the person involved for the generation of that intangible asset, overhead expense necessary for asset generation allocated on a reasonable basis. But it does not cover the general overhead unless it is directly attributable to that particular asset. If there is inefficiency or losses, that cannot be part of the cost of inventory asset, intangible asset. And there's the expenditure staff training also, that is also not a part of the intangible asset. Then they say goodwill is not recognized as what asset. This is also important that here now. In your 12th standard or in the graduation or in CA foundation, you always say, wow, intangible. Goodwill is an intangible asset. Yes, it is an intangible asset, but you know that if we don't record intangible asset. Why? You say, why we don't record that? The goodwill in the books of account, it is not allowed to do that. But why? Because to measure the cost of this goodwill is very difficult, which is not certain that. How to decide the amount of goodwill? There are different methods, average goodwill, what is the weighted average method, NUT method, super profit method. There's so many methods to do the calculation of goodwill. But those method is not accurate that way. With different people, different opinions that here. But AS26 less than that here. When you find it to the amount of goodwill that is not a reasonably a correct figure. Okay. So they say that's why goodwill cannot be recognized that. If you're paying something for the goodwill, that's a different thing. Then you can recognize. But only that here you estimate on the basis of some method, those type of goodwill not allowed to recognize in the books of account. They say internally generated goodwill is not recognized as an asset because it lacks identifiability and cannot be measured at what cost. So note internally generated brands, titles or customer lists are not recognized due to an unreliable cost. We cannot say the what is the value. I'm going to say that if you're paying something for brand goodwill, then we understand. If we just you do the valuation and recognize that this value it is not appropriate because to recognize the value, different method, different opinion that here. But that is not a reliably we cannot measure that. That's why AS26 don't recognize in the books of account. Now they say that it's subsequent expenditure. What is this subsequent expenditure that here now? They say that here now any expenditure that we're incurring later on. If that is expenditure after intangible purchase or completion is expense we will charge to P&L unless it is likely that their expense exceed the originally assessed performance standard generating future economic benefit. If you're incurring, for example, you purchase a software. When you purchase a software, every annual accounting software or any tax software you purchase, okay, every year you are paying certain amount for annual their renewal, that will go to P&L account. The same performance that, but you upgrade their accounting or that tax software. Now it will help you for the tax audit, transfer pricing, so many upgrade there. For that you pay, this exceed the original assessed performance. That cost can be capital add to the cost of what? Intangible asset. The expenditure can be reliably measured. Obviously, expenditure, if you know the expenses, how much you're incurring, then only you can recognize, then only you can write it. Then they say the measurement subsequent to intangible initial recognition. They say initially we recognize that cost, we are to deduct the accumulated amortization, means depreciation, but for intangible asset we use the term amortization. Then they say any accumulated impairment loss. Impairment loss basically covers by accounting standard 28 that I will record soon, AS 28 also that is. But let me tell you what is impairment. What is impairment loss? Impairment loss we will discuss in detail in accounting standard 28 only. This impairment loss we deduct same from the PP also as per AS 10, and if there is impairment loss in intangible assets, that also we deduct that here. But here in detail what is impairment loss we'll discuss in accounting standard 28, but I am discussing with you shortly that here. They say first of all what is impairment loss? Carrying amount minus recoverable amount. What is carrying amount? Means a book value. Book value, okay. Minus recoverable amount. Recoverable amount is the higher of these two. Value in use. What is the value in use? Present value of the future cash flow or the net selling price. So higher of these two that here. Okay, so what is the time being? Just understand this formula, and I will discuss in detail the logic and all that in accounting standard 28. What is impairment loss? Book value minus recoverable amount. What is recoverable amount? Higher of value in use. What is the value in use? Present value of future cash flow or the net selling price, whichever is higher. Okay, let's take an example on it. So it says that now in 2025, a new production process incurred rupees 10 lakh with rupees 9 lakh before 1st of December, meeting the recognition criteria. Now understand, total amount that they've incurred 10 lakh. But before 1st of December, they incurred 9 lakh, and on 1st of December, they meet the recognition criteria. It means out of 10, they incurred 10 lakh in 2025. 9 will be P&L because they meet the recognition criteria on 1st of December. Until that, they incurred 9 lakh. And after that 1 lakh, it will be capital. This is intangible asset. The intangible asset is appearing at 1 lakh. Then this recognize an intangible asset 1 lakh by December 1st, the 9 lakh before December 1st treated as an expense. Correct. Now they come to 2026. Again, rupees 20 lakh spent on recovery. Okay, 20 lakh is spent on intangible asset. So it was initially recorded at 1 in 2025. They recorded intangible asset 1. In 2026, they incurred 20. So how much they are? They are at 21 lakh. So what happened now? And the recoverable amount estimated rupees 19 lakh. Now this is the carrying amount. What is carrying amount, beta? That is book value. Now recoverable amount given is 19 lakh. So what is impairment loss is carrying amount minus recoverable amount. So carrying amount that they have given, we have calculated, that is 21 lakh. Recoverable amount is given 9. This is the impairment loss of 2 lakh. So we have to reduce the value of asset by 2 lakh. Okay, it's a loss. So that we show as a deduction from the price of the cost of the intangible asset. Then they say in 2026, the production process cost rupees 21 lakh. Rupees 1 lakh recognized in 25, 20 lakh in 2026. An impairment loss of rupees 2 lakh is recognized to the adjust the carrying amount of 21 lakh, and its recoverable amount is which is recoverable amount 19 lakh. This is what they are saying, that now the 2 lakh will be recognized at a impairment loss. Okay, now that will be, now this loss 2 lakh will reduce from the it is recorded, it is like the 21 minus here impairment loss to 19. That's okay. One more example. Now they say X Limited developing a rupees 10 crore software. 70% it is completed after 2 years. So you are developing the product, so you can capitalize. The total cost of the product is 10 crore, but you have incurred 70%. It is 7 crore. 70% of 10 crore, that is how much? 7 crore. So already we recognize the 7 crore, but their future economic benefit is 6 crore. So carrying amount is 7 crore. Recoverable amount is 6 crore. It means there is impairment loss of 1 crore. That's it. So impairment loss, 1 crore is the impairment loss. AS 28 that here shows, as per AS 28. Okay. Now show rupees 6 crore as intangible asset. Under development, no further capitalization until the recoverable amount arrives despite 10 crore. This is what they are saying now. Now we recognize the carrying amount. We recognize the intangible asset here in our this example 7. Impairment loss of 1. So now my intangible asset will be recognized at 6. If the recoverable amount still will be 6 in the future, even though we incurred more expenses for the intangible asset, we cannot recognize the intangible asset. Why? Because if my carrying amount, book value is more than the recoverable amount, that it will be recorded as the impairment loss. This is what they are saying. Anyways, remember the 7 is the book value, 1 is the impairment loss, and the carry intangible asset value is appearing at what? 6. Okay. Now we already discussed about what? The intangibles. Now I'm coming to amortization part. Very simple. What do you mean by amortization? Amortization means the systematic allocation of the allocation of the depreciable amount of an intangible asset over useful, like a depreciation model. But here they say we have the option that now when we talk about amortization, means when we talk how depreciation method, they say depreciation, we call them amortization. Okay. They say on the basis of the pattern of the future economic benefit or SLM method. So step number 1, what they say, what is the future economic benefit? They say calculate amortization ratio for each year. What is the formula of the amortization ratio? Expected future economic benefit from intangible asset of the risk. In a rapidly it is mentioned points C and D. Do the correction there. A and B write down there. Okay. So what is the expected future economic benefits from such intangible asset for respective year divided by the total expected cash flow. The cash flow of the particular year and the cash flow of all the future year. So like that we calculate amortization ratio, and whatever that is the cost of the asset multiply by the amortization ratio, that will the amortization amount for that particular year. But they say if the pattern cannot be reliably measured, if you cannot I'm going to say pattern, if you cannot calculate what is the future economic benefit pattern, in that case they say use the straight line method. Then that is very simple, cost minus residual value divided by the total useful life. Okay. Now first, pattern of the future economic benefit, if not possible, then just go on the SLM basis. Then it says that now, what is this residual value always be considered is 0 in case of intangible asset, because generally there is no market of the intangible asset that year, okay, to resell it. They say it should always be considered 0 unless committed by the third party purchase or there is active market. If there is no active market or not committed by any third party that they will purchase my intangible asset, so it will always be considered as 0. Now amortization period also, that when we talk about amortization period, intangible assets are amortized over the useful life. They say usually up to maximum 10 years. They say for the intangible assets, they don't have much life, but they say maximum up to 10 years it is allowed. But they say, but if you believe, now suppose some airlines like the Indigo, they have a contract to land their flight on the Chennai airport for a period of 15 years. They have a genuine reason that they have a intangible asset of for a period of 15 years, which is more than 10 years. Then they say, okay, in that case, they say if the estimated useful life exceeds the 10 years, regularly assess the recoverable amount, disclose the reason for the. You have to tell them why you are considering more than 10 years. So Indigo can say that we have a contract with the aviation ministry that we can lend the Indigo flight on the Chennai airport for a next period of next 15 years. So like that way, and every year we have to see is there an impairment loss or not. Now amortization review that way. Now period and the method usually review, because if there is change in the period, it was 15, so it is changed. So my amount of amortization is going to change, and the method, future economic benefit change, pattern of future economic benefit change. Similarly, the amount of amortization will also change. That's why they say we have to review it. So they say if the estimated life or economic benefit pattern changes significantly, adjust in accordance with AS5 following AS10 prospective approach. Prospect effect we have to given them. No retrospective effect if any change in the method of what amortization. Now retirement and disposal. When you find it, there is no future economic benefit, just remove from the books of account, or whatever gain or losses here, it should be charged to profit and loss account. Disclosure is not relevant from the examination point of view. Now come to again super 100 question. Now we have done with the question number 85, done 83, 84 done, 85 done. Now come to question number 86. What it says that now, as per the provision of Accounting Standard 28, how would you deal with the following situation? First, rupees 23 lakh paid by a manufacturing company to legal advisor defending the patent of a product is treated as cap. No, why? The legal advisor, you are paying to the lawyer. So what is it? Are they going to generate any intangible asset? No, you are fighting the case of the patent. That's a different thing. But you are not incurring the expense to generate the asset. That legal advisory defending the case in the court, that is not generating asset. It will go to P&L account. Now, during the year 18-19, the company spent rupees 7 lakh for publicity and research expense. Research, I have nothing to say. It will go to profit and loss account. Okay, then they say a company spent rupees 25 lakh in the past 3 years to develop a product. These expenses were charged to P&L account since they did not meet the AS 26 criteria for the capitalization. In the current year, approval of the concerned authority has been received. Okay, now, initially, they didn't fulfill the criteria of the recognition criteria, so they charge it to penal account. I told you that once penal, always penal. We cannot transfer from to penal to the asset. It will be still in the penal account. Now, next is the D. They say the company with a turnover of 200 crore and annual advertisement expenditure budget of rupees 50 lakh have taken up for the marketing of a new product by a company. Let me tell you honestly, advertisement expenses is not an intangible asset. That is a revenue expenditure that will go to penal account. It was estimated that the company would have a turnover of 20 crore for the new product. The company had debited to its P&L account, correct, the total expenditure of is 50 lakh, that is advertisement, incurred on extensive special initial advertisement campaign for the new product, correct. It should be charged to P&L account. That advertisement is not going to generate an intangible asset. That will go to P&L account only. Okay. Now here, come to next question. That is here question number 87. They say, Swift Limited acquired a patent at a cost of rupees 80 lakh for a period of 5 years, and the product life cycle is also 5 years. So they took a patent for how many years? 5 years that year. Okay. Life cycle is also 5 years. Now they say company capitalized the cost and started the amortization asset at rupees 10 lakh per annum. Wait, the company had amortized the patent of 10 lakh per annum for its first 2 years on the basis of economic benefit derived from the product under the patent. Now understand. What is the cost of the product? 80 lakh. What is the life of the asset? 5. Don't tell me so 80 divided by 5. SLM. Wait. If you know the future economic pattern of the future economic benefit, will you recognize in that pattern? So they say here 80 lakh they have recognized for the first 2 years, each year 10 lakh. It means they recognize 20 lakh. So if I say that here, now first 2 years that here. So they 10 lakh they recognize, 10 lakh that they have recognized that year. So 10 lakh that they have recognized if first year. What is the total cost? 80. So 10 divided 80. If I say amortization ratio, this is the ratio, the cost for that they have already amortized. Basically, we are not calculating the amortization. They already amortized that here now. It is a 10 is that they amortize and the 80 is the total cost. So they already amortized 0.125. First is second also 125 on the basis of future economic benefit, not SLM. Okay. But what it says that now, then they say here after 2 years, it was found that the product life cycle may continue for another 5 years. Now, they initially expect the life is 5 years. They already passed the 2 years. Now onwards, they say still the remaining is 5. I mean to say the 5 initially, beta. Then they have already amortized for the 2 years. And at the starting of the third year, they after 2 years or the starting of the third year, they believe that it is still the 5 years. Remaining is still the 5 years. It means remaining, we have to give the prospective, the remaining for the next 5 years that. Then they say the patent was renewed when Swift Limited got into renew after the expiry of the 5 years. The net cash flow from the product cycle, these 5 years, and after the second year, we are talking the remaining 5 years are expected. 36 lakhs. It is mentioned 36, 46, 44, 40, 34. 46, 44, 40, 34. So this is the future economic benefit that they have mentioned for the next 5 years. Now understand that here. So what happened out of 80 lakhs, we have already depreciated 20 lakhs. So what is the value we have? 60. That 60 we are going to depreciate now in the next 5 years. So we'll take the proper, how we calculate the here amortization ratio. I told you how we calculate the amortization ratio. Future economic benefit of that particular year divided by that here, the total. So I say the future economic benefit 36 divided by 200, that will come 0.180. 46 divided by 200, that will come 0.230. 44 divided by 200, that will come 0.220. 40 divided by 200, that will come. Now the total is 1, but do a correction. This is not all. Okay, it's a different story for the first 2 years. The first 2 years, it's a different story that year. Okay. This total of 1 from the third year. This is the total is 1 is coming. Okay. In the same proportion, we'll charge a depreciation. Now, depreciation, don't say 80 multiply by. No. We have already charged 20. So 60 remains. 60 lakhs multiplied by 0.180. That is coming here. How much? 10 lakh it is like that. So we just 60 lakhs multiply by with this amount, and then this amount will come. Okay. If you do the total, then here the total of these 5 years is 60. This is 20. That. Okay. Done. So now that is all about accounting standard 26. Very simple that here now. very similar to, and also that here, revaluation model not recommended, like the in case of a PPS 26 not if they want they can do, but not recommended because it is difficult to find it a fair value of the intangible asset in the market, because intangible assets are generally not very active in the market. So that's why the cost model is recommended for them. Okay, so that is all about accounting standard 26 that here now. Okay, done. Now, if you have any question, drop me a message in comment section. That is for today. Take care of you. Bye bye.